The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, exchange-traded funds enjoyed a rallying year in 2024. Strong markets and relentless inflows drove ETFs to new heights. For the first time, ETFs collected $1.1 trillion in new money, while assets swelled to more than $10 trillion. So how should investors ride the ETF wave in 2025 then? And what are some top ETFs to consider for this year? Well, to find out more, joining me now is Vance Tan Hong Meng, who is a financial services manager at PhillipCapital. Vance, welcome to the show.
Hi, thank you, Hongbin, to all listeners, and happy Valentine's Day.
Happy Valentine's. Oh, that's so sweet. Happy Valentine's Day to you as well. Vance, exchange-traded funds enjoyed another banner year in 2024. What's the outlook for ETFs this year? Will it be another good year for ETFs?
Well, I'm pretty optimistic about 2025, and I think we should see a year of normalization. Yes, finally. Think about it. Over the past 5 years, we had COVID-19, 2 wars, and inflation running wild. Markets sold off every time the US CPI tick up. But COVID-19 is behind us, and if global tension cools, we are in for a good year. And adding on, we just had 2 back-to-back years of 20-plus return in 2023 and 2024. Can we pull off a third? Maybe, but don't expect a straight line up. We're likely to see some retracement along the way. However, I will get worried if the US generates another impressive 20+% return this year. It could show a sign of a bubble.
Right. I mean, Megacap stocks, they dominated in 2024, creating nice returns for anyone invested in the Nasdaq-100 as well as the S&P 500. Unfortunately, as you've mentioned there, no financial market trend lasts forever. And in fact, some believe Megacap growth could pause in 2025, leaving room for other stock market segments to take the lead. So, Vance, what are the financial trends that are likely to shape market conditions this year?
Yeah, I also agree with you. And that's why this year we see Hong Kong market has performed well, and I expect this momentum to continue. And of course, US is still the main growth hub, benefited from its current economic, I call it fragmentation or detox, making things more structured and efficient. As we know, during detoxification, it is an initial painful process to get rid of the unwanted stuff, say from our body, resulting in a good, healthier body. So the good thing about this is if this detox process is successful, I believe other countries might follow, and this change in trend will lead to a better financial market going ahead.
I see. Well, then, on that note, what factors should an investor consider when choosing an ETF for long-term investment in 2025?
What factors? Well, here's the game plan. Start with a solid strategy, then build your ETF portfolio around it. Consider ETF with good liquidity. Liquidity refers to how easy an ETF can be bought and sold without significantly impacting the market price. If you want to sell your ETF, for example, currently trading at, say, $10, you do not wish to see it selling at, say, $9.50 due to low volume. And next is to choose a well-established ETF provider, which is cost-effective, meaning to say their trading fees are reasonable. And next, I like to highlight to new investors, avoid choosing leveraged ETF for now, which can magnify both gains and losses. The greater the leverage, the higher the risk. And last of all, most important as well, stay informed. Catch the latest market news on Money FM.
Thank you for the plug there, Vance. Then how do you evaluate the risk-to-reward ratio when selecting ETFs, especially as we approach 2025's potentially volatile markets?
Yeah, because we tend to be quite rare to see top-performing ETFs to outperform year on year. I quote an example like World Cup. We don't see any country winning 3 times in a row. So if you are holding a last year top-performing ETF, I would suggest consider to trim your position and reallocating to a fair value sectors or region. A well-diversified ETF portfolio will help reduce volatility, thus having a good risk to reward.
I see. I see. Okay, so I think the million-dollar question here now is, what are some ETFs to consider for this year, and why might they be the top picks?
Okay, so I'm sure most of our listeners are very familiar with US ETF. And other than US ETF, we like Asia equities this year. Despite a recent correction in the US market, Chinese tech stocks have shown resilience. And we have observed that there has been a rise in tourism in China, which could boost the economy. And as well as consumer preference for made-in-China products has also grown significantly compared to a decade ago. For example, EV. During the recent Singapore Motor Show, probably I asked a question to you, Hongbin. Guess which brands dominate the center stage? Is it China, Japan, Korea, or the European brands?
Is it China?
Yeah, exactly. You got it right.
Yeah.
So when I walk into the motor show, I'm surprised the most prime space is taken by the Chinese leading brand. To add on, not only on China, there are other Asian markets that we also do like, which is Korean market, because it has fallen 17% since the middle of 2024, and we are seeing some signs of recovery. And furthermore, last decade, Asian has underperformed the US, but could capital shift from overvalued US stocks to Asian markets is a trend worth monitoring.
I see. Well, you mentioned China there and several other countries, but are there any other specific emerging market ETFs that you think are worth considering for 2025?
In fact, emerging market stocks tends to be less transparent due to weaker regulatory compared to developed market stocks. Therefore, they are not as widely covered by analysts, meaning less independent research is available. This makes it harder for our investors to verify financial data and reflect. So, for example, last year, November, Adani Group in India, there's this bribery scandal. So I'm sure there are opportunities in the emerging market. So I will quote Vietnam, for example. Many businesses are relocating there to capitalize the lower wages and production costs. And in fact, recently, one of my clients who own multiple convenience stores across Vietnam shared that the hourly wages are about $2. And so we also observed Brazilian equities, ETF did well this year, recovering from a negative return in 2024. So these are the two emerging markets can be considered for allocation.
I see. Well, some say the financial sector could be a big winner over the next few years, and for two main reasons: falling interest rates and the new administration over in the U.S. being generally in favor of looser regulations, which could benefit the entire financial services industry. What are some ETFs to consider to tap onto the financial sector then, Vance?
Okay, definitely. First of all, will be the fintech ETF exposed to financial innovation, including mobile payments, digital wallets, and blockchain technology. So in Singapore, bank branches we have observed has reduced as most of our banking needs can be fulfilled with just a mobile app. And I remember about 20 years ago, I had to queue for 45 minutes to change a new bank book. And yes, those days are gone. Things are more effective and efficient these days. And another ETF that I may suggest that has exposure to US, Europe, and China financial services is TIM's Global Systematic Important Banks ETF. It has 29 holdings, including Bank of China, Goldman Sachs, and Citigroup. So why, as what you have mentioned, interest rates are just right, and it helps banks to maintain strong profit margins. And of course, lastly is something more exciting, which is crypto ETF. Of course, they are high risk, high reward, and provided for investor, you can stomach the volatility. So these are the three that I may highlight.
Okay. Well, what about tech-based ETFs? I mean, do they have room to run following the DeepSeek chaos?
Wow. I think this is a tough question. At the end, I would say it comes down to cost, because consumers are price conscious. Okay, let me give you an example. Say if you are booking a last-minute March holiday and you have two choices on a local carrier. Say, for example, first one, Singapore to Osaka, costs $2,000 round trip, and the other one, Singapore to Guangzhou, $430 round trip. If both destinations are on your list, which one you are likely to take?
The cheaper
and if
one?
You are traveling with, if you are traveling with say, for example, you are bringing your parents or a family of 4,
Yeah.
you probably may select the one that is more cost-friendly option that can give you the similar kind of value. And that's the same mindset companies will have with tech adoption. If it's cost-effective, it will grow. Recall when WhatsApp was launched, when there's the time where the download also it burst.
Right.
And of course, right now we are still in the early AI cycle, and some governments have already banned it from official device. So the real question is whether the private sector will follow suit.
Okay. Well, Vance, with the ongoing changes in inflation rates and central bank policies as well, how do you expect ETFs in the fixed income or bond sector to perform in 2025?
There's been quite a volatile market for bonds as well in the recent years. So I expect this year fixed income bonds to do well. Why? The reason is, for example, the U.S. government bond 10-year yield was up 2% on Wednesday because of the CPI data, but yesterday it dropped 2%. So this is a good sign for bond price that the yield is continuing to trend down. If you look back in 2022, inflation hits 9% in U.S., and currently we are sitting at 3%. It's been the downtrend. So in my view, U.S. inflation should trend down by the end of the year. And the thing is, inflation numbers are lagging indicators. So right now, most developed economies are seeing inflation below 3%, which is quite healthy.
I see. Well, we've talked about several types of ETFs here, but given the current market environment, Vance, which type of ETF, whether equity, fixed income, international, or thematic, would you focus on for a long-term growth strategy leading into 2025?
Okay, yes, for us, we are specializing in portfolio construction, so we would prefer a mixed allocation. So our suggested allocation for a moderate risk will be kind of like 40% to US and Euro equities. ETFs that we can look at is BOO, QQQ, or FPXE, which is a European equity ETF. And 15% allocation into Asian equity, for example, Asian Innovative Technology ETF. Next will be alternative asset. We'll probably suggest 10% into, say, gold, but however, gold has been at an all-time high, so do be caution when if you want to invest in gold, don't just go with the trend. Of course, trend is good, but have to watch out when it's hitting all-time high. And read commodities or crypto. However, on the defensive play, we may suggest 35% into fixed income, ETF like AGG, which is iShares Core US Aggregate Bond, or Vanguard Total Bond Market. So this allocation is not cast in stone. We will have to rebalance it from time to time.
Okay. And before we let you go here, Vance, what strategies do you recommend for balancing risk in an ETF-heavy portfolio in 2025?
Okay. In fact, ETF itself provide excellent diversification, but portfolio allocation should align with the investor risk profile. So one strategy that I must suggest is to diversify into an active managed portfolio because most ETFs are still passively managed. So my clients and investors have a hybrid of ETFs and unit trust portfolio, and as well as to reduce the risk of liquidity, that means not having enough cash on hand, we will suggest to hold cash in a money market fund to avoid cash-strapped situation. For example, Phillip Money Market Fund, for the last 1 year, the return is about 3%, which is quite attractive. It provides liquidity so that as an investor, you don't have to sell your ETF during a market dip when you need it. And every investment tool, bear in mind, it has its pros and cons. And as a holistic wealth planner, can advise you on aligning the correct instruments with your financial goal. And our team at Phillip Securities runs seminars regularly so to the public can have a better informed about current financial changes. And in fact, we have one last evening in our office.
I see. Those are some great insights there. Well, thank you so much, Vance, for joining me today.
Thank you so much. I hope this conversation provides you with valuable insight. Thank you, Hongbin.
It does. It does indeed. Have a great Valentine's Day with your wife and family later on.
Thank you so much.
Thank you. That was Vance Tan Hong Meng, who is the Financial Services Manager at PhillipCapital. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.